Everybody, Jim Malone coming to you live on Dallas Trading Floor. It is Friday. Well, and it looks as if interesting thing happened today. After today, I was expecting, with the recession news yesterday, that we would we'd be going down further. But boy, I tell you, it changes just literally every day. That's why you got to watch it every day. But basically, we moved into a confirmed uptrend. This is what the indexes are confirming right now, and that is that indeed we are in a confirmed uptrend. So very, very interesting. This is a time that you should, if you're using CanSlim technique, which I do, this is a time that you need to be starting to come into the market. And, I definitely did today. I was buying today, believe it or not. I mean, I this morning I was like scratching my head and going, what should I be doing here? Well, today I started buying because that's what the, that's what the indications were. I just want to show you the real turn came on the S&P, and so what I'm going to do here is just pull up the S&P 500 index and show you kind of what what happened today with the S&P. And by the way, if you're watching on TikTok, you can easily take a look at this. It's super duper easy. All you have to do is go to my profile, click on that link, and you'll see the link to the YouTube where we were showing all the charts and everything, so you can see them. But anyways, here's what's happening on the S&P 500. Of course, going in the Wayback Machine, going back here to March of 2020. This was the original COVID drop. This is the original COVID downtrend, and then we recovered. Boom, we went up, and we're doing great up until about the November time frame right here. We then started, I don't know why I'm having trouble. There we go. We came down, then for some reason it is giving me this fits and starts. Yeah, there we go. Came down here, and guess what? I thought this was going to be a reversal, but no. We're going to go back up. So it's really interesting. The interesting thing about the stock market is it's a forward indicator, and it shows the world about 6 months later. Interestingly enough, what it's saying is to start pushing into the market. Basically that's, what I'm doing right now. Basically, the rally is starting to happen, and a very, very strange thing because, we've got inflation raging, we've got a recession going. I mean, if I were left to my own ideas, I would say no. We're not. We want to hunker down. I've been hunkering down, but boy, it just tells us we got to follow through today. And always the thing to do: don't go all in, but it's time to start building a position with a fall through day, and that's definitely what's happening. So I'm looking for early entries, and one of them, I did do today was an Exxon Mobil. And, it's not a very exciting stock, I'll grant you that. I mean, it's sort of, it's kind of a sleeper. But I did make an entry into the stock today, basically right at here. And it does have this, it's coming up to this pivot right here at 105. But, today it was up 11% in volume, 4% in price. So incredible. When you think about this, if you look at it on the monthly chart, you can see kind of where we came in. We came in right about here, and there it is. Yeah, we purchased a full position here. So hopefully we won't be we won't be sorry about this. But looking pretty good on June. That's when they last reported, June 22nd. Their profits on ExxonMobil were up 276%. Sales were up 71%. That's pretty amazing. This has a PE ratio, folks, of 9. PE of 9. Now, this isn't probably going to go up as high as some of the other ones, but look at this. It's just amazing. The cash flow on this, $10, $1.29. And if you compare this to some of the tech stocks that have no or very little earnings, this is an earnings monster. And I think with the inflation, and I don't like the fact that we're having all this inflation. Believe me, every time I go to the gas station, I cringe. But Exxon's going to benefit from it. So I did buy a position in Exxon today. And I also did go and buy a position in Oxy, OXY. This is kind of, seems like as of late, this is Warren Buffett's favorite stock. I'm not a huge Warren Buffett fan, but I think on this one, it's pretty much right on the money. And that is, this one, I've traded this one in the past. I got out of it when it pulled back. I'm back in. It's down a little bit after our 65. I'm back in this one, and we shall see what happens here. But I think a very nice, very nice numbers as well in this one. We're up again just tremendously in terms of the profitability. It's up about 1,000%, believe it or not. Now, the sales are up tremendously. Again, PE ratio of 13. This one probably, if it goes up, will go up a little bit faster than Exxon because it's a little bit more leveraged. Return on the equity on this one's 17%. So pretty darn good when all things are considered. Now, as long as this rally continues, I think we should be okay on this. Currently, in the small portfolio, I'm basically in only 3 items here. I bought Oxy and Exxon today. I reduced my position in CRISPR, just kind of a disappointment. And this just comes down to the way it's performing. CRSP is the symbol. I didn't think it would pull so low, but it has. It's pulled right down to the 21-day line. And there you go. It's pulled right down to that green line. Here's one thing I kind of want to show you about, and this is from IBD, which is, by the way, I highly recommend. And this is sort of what to do with a swing trade. Now, this is basically using Ollie's bargain outlet. Now, when you're entering a swing trade, sometimes the best time to get in is as it's making its move. It's best to always buy above that 200-day line. That's one here. So that's kind of your first event that on your checklist. You want to make sure that it's moved above that 200-day line, which definitely Ollie's did. And if you look at CRISPR, that is the case here. That would have been right about here is where it would have. Oops. Come on. See if I can. Oh, there we go. CRISPR would have made its move above that 200-day line right about there. And so following the kind of the plan here, you want to make sure that it's starting to close above, it's starting to make its move. The first event is when it's going to close above that 200-day line. Second event is when it's going to close above the higher high. That's about at 2. And then it's going to pull back. So it's kind of your third thing to the 21-day line. That's sort of your first test. Then it's going to move back up. But what happened here was, at 3 is where I was essentially buying when it pulled back to that 200-day line. This is CRISPR. Oops, this is CRISPR here. See if I can put it up there. Yeah. So it pulled back to that line there. You see, and that's where I got in, right there when it pulled back to that line, thinking that it was gonna make its move. But this sometimes happens. It will come down to that line. That's good, and then sometimes it will continue on here, but sometimes it will move below the 21-day line, and that's where I had to kind of start reducing my position. So I reduced my position in CRISPR right as it moved back down to that 21-day line. I want to always keep in the stock when it's above that 21-day line. I want to start to either close the position or pull it back when it goes below that. So I had to throttle it down a little bit today. It was kind of disappointing when it comes to it. But one thing about this is you always want to be looking at that relative strength line as well. And if that relative strength line is moving lower, that's kind of a bad sign, and that's sort of what happened to me on CRISPR, similar to Ollie's Bargain Outlet. Now, I'm not giving up on Ollie's Bargain Outlet, but I got out of the position, and I'm waiting for a movement into it. So that kind of just gives you a little bit of insight on how to trade on a swing trade. Also, one thing though, one rule in Can Slim is typically on the first day of a change in market direction, which we had today, that's when you should start wading in. So that's kind of what I'm doing here. I'm wading in and seeing kind of what's going on here. All right, Lisa's asking about XBI. Thank you so much, Lisa, for watching the show. XBI, let's take a look here. And it looks like S&P Biotech. Well, you know, I haven't been, this is probably the best way to invest in biotechs because there's more biotechs than any other stocks out there. And this way allows you to invest in those biotechs without having to pick one in particular. Now, you know, I picked CRISPR, which is one in particular. I probably should have been in the biotech ETF because it smooths it out because it's got so many more things in it. So my, you know, kudos to you on that. Here's something I'd watch out for. We're still above that 21-day moving average, which is a good thing. That's this green line here. But we want to see it kind of reverse higher off that. Also, something to be concerned about here is we have this relative strength that is lagging. It's going from high to low. We don't want to see that. So is this a good entry point for this? Well, I would probably say no, because if I went over to the weekly chart here, basically, you know, we are starting to see a little bit of a reversal, but, you know, we were still way down. So I probably would be very careful here. If we look at the pattern recognition on this one, we are still 30% below the pivot that happened way back almost 100 days ago here. So this is the last pivot that we had right there. So we're very far below that. As you can see, we're very far below that. Would I buy it here? No, but I would watch list this one. You know, I definitely would. I definitely would watch list this for now. I would not buy this one, but you know, no buy. But I would watch list. I mean, this is a good, you know, this is you know, this is a good one here, Lisa. But I wouldn't buy it here. I just wouldn't buy it here. I would watch this one. Why? Because I think it needs to get some more strength. It's really it sort of is making a reversal, but it's not there yet. There's some very big, there's some big warning signs for me here. One of the big warning signs is that 200-day line. I just don't like to buy below that. It's just one of those things that I don't like to do. Why? Because that line, that by the fact that this line is sloping down, that means investment is flowing out of this. So not a good place to buy it. So here's the thing. I wouldn't buy this one. I would watch list it. But I think it's very good, though, that you're asking. I definitely think it's good, but I would not be a buyer of XBI. All right, let's take a question from the TikTok people. Hank, thank you very much for watching on TikTok. SPXL, buying the dip. Well, you know, I don't know. You know, in this market, I have not been buying on dips, you know, but I have been looking for reversals. SPXL. One of the things I don't like buying on a dip is that I want to see it. I don't want to buy it as it's moving lower. I want to move it as it's going higher. This is let me put it on here. This is the Bull 3X. This is a leveraged fund. This is a leveraged fund here, so I would be a little bit careful on this, even though it's a bull fund. Though we have traded, you know, we've traded our downward motion for an upward motion. which is good. I still think that, you probably don't want to buy this one just because it is not, it's just below that 200-day line. I just think that there's better merchandise out there to do. So I would say no on, I would say no go on this one, just because it is trading below the 200-day line. So I would not be buying this one. Lisa, we took a question from Lisa. Let's take a question from Matt. Thank you, Matt. Let's look at MOH and see. And there we go, MOH. Molina Healthcare. Boy, I tell you what, I have a personal grudge against Molina Healthcare. Very profitable company. But, I used to have Molina Healthcare, and I went to the doctor once, and they wouldn't take it. So I'm not a big fan of Molina Healthcare. Terrible customer service. But I think it's very profitable because I don't think they pay anybody on this one. Not a particularly fan of this company, but it's definitely in a good space. 14 out of 197. Definitely looking pretty good here. The question is it reversed, and what is happening? It is at a buy point. There's a 315 buy point right here. It is still in the buy zone, but it's extended. So even though it is in the buy zone, I still think it's extended. So I probably would not be a buyer of this one, just because it is extended. So that would be my take on it. MOH is extended, and even though it's in the buy zone, I think it's just run up too quickly. Now, if it pulls back a little bit here, then you might do it, but I think it's pulled up. I think it's moved up very quickly. Excuse me. And now it may adjust back. So be careful here. Definitely a good one for the watch list, but I think it's extended, and I think that you just got to be careful here. I really do. I think you've got to be careful. So I probably would not be a buyer of that. Wouldn't be a buyer of that. Ryan's asking, what is the best bottom fishing stock? Boy, this is really tough. I mean, here's the thing. I have not been bottom fishing. I have instead been, kind of trying to buy this stuff with strength and, doing the standard can slim thing, buying the thing with strength. I think probably, your best bottom fishing stocks are probably going to be something like Apple. But you're not really on the bottom with Apple. So, gosh, what would be the best bottom fishing stock out there? All right, well, here's the thing. Let me just kind of do something really quick. It's probably the semiconductor space. So let's see if we can screen for that. So what I'm doing is I'm going over here to the list of, the list of areas, and I'm going to look at the group rankings, and I'm going to look for one at the very bottom. Oops. I'm going to look for one at the very, very bottom, which is retail mail order. Retail home furnishings. I'm just looking for something that could be explosive. Computer hardware peripherals, data storage. Let's look at computer hardware peripherals. And I want to see what is the best, and this is starting to turn up, what is the best stock in that area? Super Micro. And this might not be a bad idea, this stock here. This isn't really a bottom fisher stock, but I think this one could go much higher. It's a company called Super Micro. I'm pretty familiar with it. SMC. And I think this one might, this isn't a true bottom fisher, because the true bottom fisher would be below that 200-day line. And this is the 200-day line here, and it's obviously moved above that. But since the mid-June, this one has been showing some pretty good signs of strength. And it's in one of the bottom groups. I mean, it's in the computer peripherals group, 187. So this group probably is going to move up. Strong relative strength, 97. And we are still, if we do a reversal, we've just moved above that reversal line. So this might be something you could possibly get into. 54. Now, I suspect, and I want to look at the price to earnings ratio here, because This is becoming more important. Now in the past, with growth stocks, this has been as important, but we're in a downturn now. We want to see things that are making money. $3.25 a share. That's pretty darn good. 14 PE ratio, and the sales are increasing. I'm liking that. And also the profits were up 210% last quarter. So this is one I think that you might be able to bottom fish here, and that is Super Micro. It's in a bad group, but it's a good stock. So for the bottom fish, look at SMC, Super Micro Corp. And this is what they do is they make servers, and so that's one I think that you might look at very seriously for a bottom fish. Now, it is not a true bottom fish, mind you. Okay, it's not a true bottom fish because it's been going up, as you can see. Okay, but it's in a bad group. See, it's in this computer peripherals group. It's in a bad group, but this is a top stock in that area. So I think this one might be worthy of your attention. It has just moved above a pivot, and it looks like it's starting to consolidate, and hopefully it will move higher. But this is oops, I said look. Boy, I tell you, I need to get some spelling help here, man. Let's see. Well, anyways, it's not L-O-K-K. It's L-O-K. Look, L-O-O-K. Sorry about that. So anyways, take a look at this one, Super Micro SMC, for a bottom fish stock, because it's a good stock in a low category. So there you go. All right, Funko. Everybody likes Funko because of their action figures. They say that this is kind of in a recession. These affordable luxury companies, you might not be able to take a trip, but you can afford something from Funko, and that is popular among a lot of people. They have the, I think, Stranger Things, Stranger Things figurines. I'm not sure exactly what they have, but I know that it's been doing quite well. F-N-K-O. Sorry about that. F-N-K-O is the symbol for that. Funko, and it looks like it has this very nice cup pattern. Now, we're looking at the weekly chart. When you start looking at stocks, one of the best things to do is to look at that weekly chart initially, and then get an idea of where things are going, and then a little bit of trouble with my glasses there, and then possibly and then possibly look there. Now, this has got this absolutely well-defined cup formation, and you can see we're making that higher high on the cup. So this is not a bad place possibly to look at. Now, if we zoom in a little bit by going to the daily chart, you can see it's kind of it's a little bit of it's a little bit busy in terms of its chart. It's very volatile, but there's a 25.93 buy point there, and it's right in the buy zone. So this is definitely one that you could possibly start moving into here. I mean, it's off a little bit after hours, but look at this. It's got a relative strength of 99. I'm loving that. And one of the things I'm also really liking is I'm liking this relative strength line. It's pointed straight up. So those are very good attributes for a stock like that. I'm going to put it down. FNKO, of course, is one that we're recommending. And I definitely think this is a good one. It's got a 100% checklist, by the way. So this one might work very, very well. We're very close to the pivot. The pivot is 1%. We're just above it. So could we buy here? Well, here's the thing: is when a stock comes and it moves through the pivot, then the question is, will it hold that? Obviously, we can't do anything until Monday. But if this thing holds on Monday, this might be a good buy because it's got some strong volume coming in here. People seem to like this one, and it's definitely showing. I want to take a look at the fundamentals on it. Definitely look at that. It's very good. 164, 40, 48, 63. So their sales are moving up very, very nicely. Also, you have profits, and that's, of course, the key. Profits are moving up. And for considering it's the industry that's in, it's a relatively low PE, 17. It's a positive cash flow, and I definitely like that. Part of the thing the market has changed somewhat in that growth stocks aren't quite what they used to be. It's more dependent on profits, and this one has profits. So I think that with this one, I think you could buy this one. I definitely like this. I definitely like this stock. So I would say, Funko, FNKO, is viable here. So I think it's viable here, and I think you could go in and make a buy on this one, actually. I don't normally say that right off the bat, but I really appreciate you bringing this up. Very nice relative strength line. This blue line here, and that's going straight up. We want to see that, definitely. If that line's going up and the index line, that's the S&P 500, that's going down, you see what this means is that this stock is gaining strength on the index, which means that money's flowing in. And that is always what you want to see. So this is definitely one that you could buy here. Very good question. I really appreciate it. I wrote it down in my notes. I got to start doing better program notes on this, but thank you for bringing that up, R. Appreciate it. That's a good stock, and I definitely think you could definitely buy it here. So I think it's a really good one. Let's look at Netflix just real quick here. Let's look at Netflix. NFLX, of course, is the symbol for Netflix, and it's coming up. This one, it sort of had a fall off. I actually shorted this one. I did close my short, thank goodness, because now it seems like it is gaining some strength. But boy, oh boy, look at that. It just moved down hard. And now it looks like it may have bottomed right here at about 165, 170. And it looks like it's making a move up. But I'm not convinced I want to be in this one because the relative strength is only 19. Remember, we were looking at Funko, and the relative strength on Funko, I just want to show you that, was about 97. So I just want to compare this. I want to compare these two stocks together because I think it's very indicative. This is why relative strength is so important. Now, if we look at Netflix, which I don't recommend buying, and we look at Funko, which are brought up, which I think is an excellent suggestion, FNKO, let's kind of look at their performance over the last year. Oh boy, that just kind of tells the tale, doesn't it? If you invested in Netflix at the beginning of August, at the beginning of August last year, you would have basically given up 55 cents for every dollar invested. But if you invested in Funko, you would have had 40 more cents in your pocket. So this is why relative strength is so important when you're looking at a stock to buy. Netflix has a relative strength of 18 here, and if we go back to Funko, FNKO, we have, oops, let's make sure we get that right. FNKO, and thank you for that, R. If we go in and we look at that, the relative strength on Funko is 99. So that tells the tale. So what were my thoughts on Netflix? Not time to buy it. Its relative strength is just too weak. We want a stock that is stronger than the market. The stronger, the better. Now, a lot of times, though, we want to buy a stock that has a relative strength of at least 80. That means it's in the 80-20 rule. I don't know if you heard that in college or somewhere else, Pareto's Law. 20% of the stocks are going to give us 80% of the price appreciation. So we want to look at a stock that has a relative strength of 80 or better, and that's not the case, unfortunately, with Netflix. So I would skip Netflix and Funko, probably buy that one. All right, let's look at DVN, and this is from Charles, DVN. And take a look real quick here. Oh, hopefully if I can not fat finger it, DVN. There we go. All right, so here we go. Devon Energy, in one of my favorite groups, the energy group. I have to say that, as the market is starting to turn, energy is a great place to be. It's a great place to be in the market. It has been for all year, the whole year, and I don't think that's going to change. Now, interesting thing about this, if you'll notice, we go all the way back here. Very nice. It's very nice movement here, basically all the way from December 2020 all the way till now. Now, what it did is it came down, it tested, and now it's starting to make its move up. So this is a good chart. Again, this is also kind of a good chart. We came down, we tested, we're above that critical 200-day line. I don't like to ever buy below that line. 98 relative strength, that's looking pretty good. Let's compare this to the index. Let's see how well Devon has done against the spider for energy, the XLE. Here's what I'm going to do is I'm just going to do a quick comparison here. This is Devon, and let's look at it against the index, which is XLE. It's not really the index, it's the ETF that covers energy, so that kind of covers this area. If we look at that, Devon is significantly outperforming the energy index, so that's very, very good. If a year ago we put $1 into the index ETF, which is the XLE, is that right? Yeah. Oh no, I'm sorry, I've got the wrong one. XLE, I apologize. Let me see, XLE. I was like, yeah. Okay, yeah, there we go. Disregard this one down here. Sorry about that. Let me do this over again so we get it correct. All right, so let's look at the performance of Devon against the XLE, which is the Spider Select Energy ETF. All right, let's take a look at that. Okay, now we're back on track. So Devon is significantly outperforming the index, which is good. So that's definitely a top point. So not only are we buying in the right area of the market, we're buying a top performer in the right area. If you'll notice, it's moving up faster than the index. So this is a good sign. So I definitely like that in terms of in terms of way to go. Also, again, if you started here with $1 at the beginning of last year and you put it in the XLE, you would have been, pretty done well. If you just put it in the index, you would have been 50 cents richer. But if you put it in Devon, you would have been almost a little bit over $2 richer. So definitely Devon is looking good here. Now the question is, can we buy it at this level? Well, one of the things is we are going to hit some resistance at the 50-day line. That's just come up to the 50-day line, but it's looking good. Now here's the thing. We may get a little bit of a pullback on Monday. Not to worry, but we may get a pullback on Monday to about the $61 level. I'm just looking at the 10-minute chart here to show that. But we may get a pullback down to here, but I still think this is absolutely buyable in light of the market moving up. Now that the market is in a confirmed uptrend, this would be a good one to buy. This would be a good one to buy. Let's look at the peers of this one. I always like to look at the peers because there's so many in this group, this oil and gas group. But let's look at it. It's number 27. So let's look at Devon versus its peers and see if that's the right one to buy. So let's take a gander. See if I can get this ranking here. There we go. Rank. There we go. Okay, so no. All right, industry group rank. And again, this is number 27. All right. There we go. So this is the group. This is oil and gas US E&P. This is the group. And in the group, let's look at how Devon stacks up. Well, Matador is actually at the top, interestingly enough. So Pioneer, Ranger, Matador. Devon's looking good. Let's compare this. I want to compare Matador with Devon to see if if this is the right one to go. So let's put in Matador. There we go. And let's look at Devon. Devon, of course, is the one we're kind of looking at. Can't see this very well. So yeah, I agree with you. I agree with you, Charles. Here, Devon significantly outperforming Matador, which is one of the top in the group. So I would say that yeah, definitely good looking chart for Devon, and I think it is buyable. Let's just go back here and look at it again. You can see I was trading Devon back here. So yeah, I do think this is buyable. And let me just check a few more little things here really quick. 89 checklist, that's looking very good. Technicals, how close to the 21-day line are we? We're a little bit extended from the 21-day line. Here's what I would do. I would probably wait on Monday to see if it pulls back closer to the 21-day line, but I definitely think this is buyable. I definitely think this is viable based on the market conditions. So I have to say that you know, that DVN, you know, DVN is viable, but I would wait for a pullback to closer to 21-day line. So that's kind of what, kind of confusing there, but that's kind of what I would be looking to do. I think it's buyable. I think you got to wait until it pulls back a little bit closer to the 21-day line. What I'm talking about with the 21-day line, of course, is this green line here. So what I'm looking for is, I think there's going to be a little bit of a pullback probably. It probably will not go below about 61, but on Monday, if you could get it at about 61, that might be a good place. I think this is a nice, strong uptrend. I think it's definitely reversed. And, you know, it's in a very, very good area, and I think it's one of the strongest ones in a very, very good area. So definitely like the stock very much, and I think that it definitely is buyable. All right, let's look at Dollar Tree. This is what I got shaken out of, unfortunately. Wish I had. I like this stock because every time I drive by a Dollar Tree in my neighborhood, there's always cars there. So I got shaken out of this. I hate it because my stop loss basically was right here at 163. I got shaken out as it came down to right here. I got shaken out of it. I probably should have put my stop loss here at you know, at the 50-day line. What it did is it moved down, it tested, and then boom, it's starting to move up. So I may be buying this one again. I may be buying this one again. Sometimes you just don't get it right. That's what happens when you swing trade. Sometimes, you know, you put it in and it doesn't work. Here's the little chart that that we use. Sometimes what will happen is it'll come down below that 21-day line. That's the line that I really look at, and that's essentially what happened here. You know, we had this, you know, it came down below that 21-day line. The 21-day line's right there, and then it tested the 50-day line, and now it's moving back up. So I may be in the stock if it moves above that 21-day line, which is currently the current 21-day line is 164.70, so we're pretty darn close to that. We were there, and then we pulled back a little bit out of it. So we're right about at the 21-day line. I think if it holds on Monday, you could probably move back into this one. I kind of got dissed here because I got stopped out at 163. But I definitely think you can buy this one at, you know, this price now, because we're in the buy zone. I think it's tested. I think it's moving higher. But again, you know, when you're swing trading, you have your stop loss is very, very tight, usually 3%, and I got knocked out because of the volatility. But I'll probably be back in. I really like Dollar Tree. Like it's a good it's It's a good stock. All right. Well, how much? Where have we done? 39. Okay, great. Let's take another question. Thank you very much. Hey, thanks, Troy. Thanks for watching from Canada, beautiful Canada. Nice and cool up there. I think, yeah, I think I agree. Actually, the reason I think that's a good thing to say there, Troy, because the relative strength on Netflix is so weak. It's like 19. And we just don't want to be buying 19s. We want to be buying 80s or better. We want to be buying stronger stocks. Even though this is a kind of a bottom fishing market, we want to be buying those stronger stocks. So I kind of agree with you about that. I really, really do. All right, let's look at, this is Datadog and VET. Let's look at Vermilion VET. This is an interesting stock. I've been watching this one for a while. I want to find a good place to get into this one. I do think it's really, really good. It's just moved above the buy point. I think this is a very good stock. This is a Canadian driller, and I really like the oil and gas stocks, I have to admit. And this is one of the very best. We have a 99 relative strength on. Again, I love these stocks with these high relative strengths, because this means that this is, now that the market has started to move up, that means that this one is going to do even better. Look, this is a nice relative strength line. It's moving up. We have a cup formation. We have a buy point at 25.41, and we're above that, so we're right in the buy zone. Let's see. I just want to take a look at the fundamentals on Vermilion, because I think they're very good. Look at that. Yeah, they are. Sales are up 110% last quarter. 199.90, so they're definitely moving up. Now, there's something going on here, because they looks like they had a charge here. Let's take a look to see. There probably was some kind of impairment charge on the accounting here, because they were up 690% in the first quarter, and then they were down 45%. So I think this is an accounting charge. I'd have to do a little bit of research here, but I like the fact that this PE ratio is very low. It's 6, so I'm liking that. Also, you got this strong cash flow. It's $11.11 per share on a $25 stock. That's pretty amazing. Now, there's something going on here with the accounting, not quite sure. And let's take a look at the funds. Yes, they're moving in. I love that. You see, when you see this increasing fund ownership, that is a very good thing, because that means institutional money is coming in. So I definitely have to say, I definitely think that that VET, Vermilion, VET is a buy now. So Vermilion is a buy. Vermilion is a buy. It's looking very good, very strong, 99 relative strength. Now, for Datadog, I don't know if I can say that. Let's take a look at Datadog here real quick. DDOG. And some of these, some of these stocks have been doing well, but I just don't like the overall trend of this one. This is again the problem. I don't like this trend. We're moving down. This is a 23 relative strength with a movement down. Not liking that in this environment. Cash flow is okay. 71 cents. Not like Vermilion. PE ratio 1.45. Wow, that's a lot. So let's compare these stocks. And I always like to do the comparison because I can do it now. I figured out how to do it. Like a kid with a new toy. So if we look at Datadog, the trend has been down. If we look at Vermilion, the trend has been up. So which one would you rather have? Datadog? Vermilion? I think the answer is very clear. I think Vermilion is one you want. I think you want to skip the dog and get the Vermilion. I think you want to skip the dog. I don't think you want Datadog. That just doesn't look appealing to me. That's all. I don't think it's as appealing. So VET, I think, is the one you want. Buy on strength. It's looking very strong. All right. Can you give an example of a bull call spread? Very good question. All right. Let me show you what a bull call spread is. All right. Let's figure out. Let's say we are going to be. Let's say we're bullish, and I'm going to say we're bullish on ExxonMobil. So I'm going to do that, XOM. So I'm gonna put ExxonMobil up there. So let's start with the chart. And I'm pretty bullish on ExxonMobil, all right? So here's the thing with ExxonMobil. Right now, it's at 96.75, but I think it's going to move higher. I think it's going to move up to the pivot, and I think it's going to move higher than the pivot. And the pivot is at about 105, okay? So that's the pivot right there, okay? So I think it's going to move from approximately I think it's going to move from approximately from 95 to 105, okay? And I think that's going to happen in the space of about 2 months. I'm just guessing this, but it's based on this past performance. I think it's going to come up to about here in 2 months. So how am I going to do? How am I going to make? How am I going to make a play on that, on a bull call spread? What I'm going to do here is I'm going to look at the options. Now there's a number of these profit calculators online. I typically like to use this one called Options Profit Calculator, and basically, based on the chart, we're looking for Exxon to go from 95 to 105 in 60 days. So what I want to do is I want to go over here and I want to see kind of, you know, what we could find to make that kind of thing happen. So if we look at ExxonMobil, I'm going to get the price for that, and it's loading up right now. And then my expected price on this is going to be 105 because that's based on the chart, right? And I'm going to say I'm going to have that come to in 2 months. So at 60 days, I think it's going to be at 105, which is the pivot. So I'm going to put that August 30th, 31st there. So, and I'm willing to risk, let's say I'm willing to risk, okay, well, let's say I'm willing to risk $500. All right, let's take a look. Now, I want to see if I can find an option pair that will give me a bull call spread. So I'm looking at, that's a debit spread. Let's see if I've got, most of these are debit spreads. Let's see if I can find a bull call spread. Well, let's see if we just did a debit spread. Let's say we could do a debit spread that potentially could give us a nice return. So let's look at this one. This would be a 100-103 call spread. No, that's a little bit too much. 3, 7, 15. Okay. So let's do a call spread. Okay, this is a call spread. So here's the call spread that I would look at possibly for Exxon, because I think that Exxon is going to be moving up, and so with this one, this would be a debit spread. So the way this would work would be that we would buy the September 2nd 100 call, and then we'd simultaneously sell the 103. Okay, out of pockets expense $439. So if we did that, and we go down here, let's look at the payoff chart potentially. Let's look at that. And that's going to give us an idea. Oh, that didn't quite work. There's the profit loss. Okay. So if ExxonMobil were to move above this number, about 102, 103, about 103, we could make a potential on this trade of about $1,000 based on about 400 at risk. So about a 2-to-1. Let me just send this. Let me just send you the link for this to everybody out there that can take a look at it. Kind of what I did here. So let me copy that and put that out there to everybody. This is the link to the XOM bull call spread. So just use this link, and you should be able to take a look at your leisure at this. So there we go. So there we go. Now, everybody that's watching on TikTok, the link to this calculation for the bull call spread on ExxonMobil, it's available on the chat on YouTube. So you just jump on over to YouTube by going to my link. It says Beacons. Click on that. Scroll down to where it has the today's episode. Click on that, and you'll be able to get this link. It's in the chat, and after the show, you'll be able to use the link, and it's operational. So that will give you an idea of a bull call spread. Thank you very much, Charles, for that question. Very good. I got that. Probably will do it for today. Let's see if I can take one more question, and then move on. All right. Let's see. I think I put the spread out there. Okay. Oh, let's do AMD. Thank you. Let's do AMD, and let's take a look at AMD, see what's going on there, and that'll be the last one for today. But I thank you for that great question, Charles. Really appreciate it. All right. So here is AMD. Oops. Well, that's not AMD. That's ExxonMobil. AMD. There we go. Now, I'm not as bullish right now on the semis as I am on the oils because of the relative strength. Again, I'm always looking for very high relative strength. One of the issues here with AMD, and I love this stock, by the way, and you can see I've traded it, is right now the relative strength on AMD is fairly low. Well, it's 63. I typically want to see a stock that has an 80 relative strength or better, and that's not the case here. So, but it did look like it made this nice reversal off the bottom, and now it's trading above that 50-day line, which is good. Here's the problem that I don't like about this right now, and it's true, I might be able to do well if I were a better bottom fisher, but I'm not. I want to see it move above that 200-day moving average, and I want to see this 200-day moving average sloping up and not down. See, now it's sloping down. That means that money is flowing out of this issue. So even though the stock is going up, the money is flowing out of this issue over 200 days. So not a good thing. I just don't think it's time for the semis yet. I love the semis, but I think, we don't have a true reversal yet. If we draw the line, you'll see that, yes, we're starting to get a reversal, but we're not there yet. So the trend currently for AMD is lower. It's still lower. So the overall trend for AMD is lower, unfortunately. I wish it wasn't, but it is. The overall trend right now for AMD is down, so I'm probably not going to be a buyer of AMD because I don't like to buy in a downward trend. I want to make sure that we've turned the corner and that we're moving higher. Also, another thing is that relative strength. Now, if we look at the checklist, and the reason I love the checklist because this is a quick way to kind of just look at that. The relative strength rating, it fails because it's less than 80, and I want to see these 80 or better, preferably 95 or better. I want to be in the top of the market because remember, we want to use Pareto's law to our advantage, and that is the 20% of the stocks are going to get 80% of the gains. So you want to see relative strength of 80 or better. You want to see that. And it's a little bit far off its high. Now, if this gets closer to its all-time high, then maybe we can look at it. So for right now, we have to just kind of pass on AMD and just watch listen. Kind of bad, but we just have to watch list AMD for right now. Let's take two more questions. Let's take one for the Spider. The Spider did turn up today, and I was expecting it to go lower, to be honest with you, but that's the reason I started buying today is because we had this signal, and the signal was strong, and that is, we are seeing an upward trend on the Spider, and that means we're at least for right now, we're going a little bit higher. So if we reactivate, if we reactivate this line, this is the reversal line. Let's see if we can do it. Yeah, if we reactivate this line, we definitely are making a movement up. Typically, I'm not a buyer of the spider because it's below the 200-day moving average, but I think we have definitely broken the trend. We've moved from a downtrend. We've moved from this downtrend to this confirmed uptrend because we've moved past the reversal line. So we're looking good. 411. It's off a little bit after hours, but it does look like a change in the character of the market. So would I buy the spider here? No, probably not. But I would buy the strongest stocks in the strongest areas. That's the reason I've been buying oils today, ExxonMobil and Oxy, because I do want to be in on this market, but I want to be where the strength is. The strength is still in the oils, and that's kind of where I want to be. So that's what I did there. All right, one last question, and that would be on Intel, and of course that is symbol INTC. And this one may benefit significantly from the spending for fab infrastructure in the country. But I want to point this out, and this is not a good sign of what happened today. As you can see, we kind of had this terrible gap down. This terrible gap down. Let's kind of look at it on the 30-minute chart. Look at this gap down that we had from 39 all the way down here to 35. Okay, so unfortunately, it's just still not time for Intel. You know, this gap down means that there's all kinds of resistance on this line. There's all kinds of resistance right there. So it was trying to make a move. It was trying to make a move above that reversal line, and it got jammed it got jammed, and unfortunately, it didn't work. And the part of this was the earnings. You know, unfortunately, the earnings for June came in 22% down in terms of sales, 79% down in terms of profits. So Intel looks wounded here, unfortunately. It does have good cash flow. The PE ratio is 10, which is excellent. But, you know, it's going in the wrong direction. The sales are going down. Profits are going down. So not the time to be in Intel, unfortunately. Also, look at that relative strength. That doesn't lie. 22. 22 is not where you want to be. They're going to be spending a lot of money, not making as much profits as they should. So you just got to stay away from Intel. So I would just, just stay away from Intel. And that's kind of painful for me to say because I do love the company, but I just it's just not working. So stay away. So I think that's really kind of what you've got to do. You just have to stay away from Intel. It's not a good chart. It's not in a good place. It's got a poor relative strength, and that's that. Most of the primary indicator for a stock is relative strength. You want relative strength. The way candle works is when the market turns into an uptrend, we want to jump in to the highest relative strength stocks because they will accelerate faster than the indexes will, and that's what's happening. That's the reason why we want to get in these stocks that are 80 or better. Oxy has a 80 or better relative strength. So does Exxon right now. So those are the stocks you want to be in. Intel, on the other hand, 22 relative strength. So even though the market is moving up, this is going to be a laggard, at least against the market. So we don't want to be in that. So stay away from Intel right now. Okay, I'll be back on Monday, of course. Hopefully. I'm going to be moving offices, so hopefully everything works. It may or may not. I didn't get to everybody. I'm going to try, but keep watching the channel. I try to get as many stocks as I can get to. We put out a nice a link to how to do a call spread on ExxonMobil. This is a call spread that will could potentially double your money in 60 days. It's not a guarantee or anything, just want to put it out there. But basically, we analyzed the chart, and then we looked at that to see where the stock is going. I think it's going to move up to about 105. So the way this works is that it is a bull call spread, and it might be of interest to you. That the link to the chart is in the chat. So look at Dallas Trading Floor, and then it has a link to that. Hopefully, everybody is going to have a great weekend. If you haven't already signed up and subscribed to the channel, please do that. It really helps me out a lot. I love doing this, but I need more people to watch. So please like it and subscribe too, please. Really appreciate that. If you're not already a member of the Action Trade Alerts, it's super easy to do. You just have to go to www.Dallas Trading Floor. So until Monday, thanks everybody. Happy trading. Tell your friends. Please subscribe, and I will see you back here on Monday.